Bitcoin and the crypto ecosystem have experienced a sharp drop in recent hours. We're seeing a 14% decline in Bitcoin, a 24% drop in Ethereum, and even the traditional market has fallen by as much as 4.40%. For the traditional market, this percentage represents a significant decline. Does this confirm the bearish path for all financial markets? Let's start by talking about the S&P 500 in the traditional market, revisiting what we mentioned in our last video. We had observed not only the crypto market dropping, but also the S&P 500 and the NASDAQ, which were signaling, though early on, that things might take a turn for the worse in the medium term. This was the focus of our last analysis on Friday, and now on Monday we're seeing a bit more information come to light. This new information regarding the S&P 500 shows that after breaking out of the wedge pattern aggressively and updating its structures, we can identify how it has been working around and respecting that key trend line. This trend line might define the market's direction in the short term, and we've ended up seeing how it held up. If this is what the S&P 500 is showing us, now let's turn our attention to the NASDAQ. Similarly, while it updated the wedge, its structures haven't changed significantly, and you'll notice this in a moment. We observe a similar behavior, compression in a wedge formation that culminated in a climax. Here, we identify the breakout, as you can see, and the price respected that critical level without breaking through it. Had that level been breached, it would have almost certainly indicated a confirmed bearish move. But as we can see, both the NASDAQ and the S&P 500 have held their structures, meaning the battle is still on. Now, let's take a look at MicroStrategy, which is also key to understanding the current situation. What we're seeing with MicroStrategy is that the $325 level has not been breached. That structure remains intact, and as long as this level holds, MicroStrategy can continue to stay afloat without any major issues. So, just like the S&P 500 and the NASDAQ are reacting exactly where they need to, we can see that MicroStrategy is doing the same. Now, let me explain what we're observing in Bitcoin and why it's crucial to understand the significance of this wedge breakout, as you can see here, as well as the fact that this structure, at least for now, has not been surpassed. As I was saying, since we've broken the wedge and moved to target the second institutional level, the compression we're witnessing clearly tells us we need to pay close attention to price behavior. Here we have the creek, a critical level. If in the future we see this level break, just as with the S&P 500 and the NASDAQ, it would indicate the potential onset of a bearish market in the medium term. However, notice that when we analyze the structure that truly matters, we still don't have definitive confirmation yet. In other words, in Friday's video, I was telling you that we wanted to anticipate this event. And as we're seeing right now, that medium-term bearish trend hasn't been confirmed yet. In this video, you're seeing exactly what we need to watch for in the crypto charts to validate that hypothesis. If we look at Ethereum's chart, one might initially think that everything is already lost, that the bearish path is inevitable, and that thinking otherwise might even be dangerous. That's what Ethereum's chart seems to suggest on its own. As you can see, we've gone through a bullish accumulation phase, which we identified. Institutional profit taking from this accumulation has already reached the second target. I think it's quite clear. I'll just say that when institutions accumulate positions in advance, they already know how far they'll drive the price to close their long. And here you're seeing exactly where they've done so. At the same time, remember that we're coming from a complex corrective pattern. This is a bearish impulse with a W, a shallow Y, and all of this forming a Z in a wedge pattern. That Z has already broken through its structure, its trend line, which is something that should alert us. As I was mentioning in the last video, analyzing Bitcoin and other assets, this breakout is, of course, something we must be cautious about. It was reasonable to think that the start of a bearish trend made sense from the perspective of anticipating market moves, as we had already discussed. Of course, anticipation carries risk, everyone knows that, but the important thing here is to understand, as I mentioned, that if you look only at Ethereum, things look bleak. It seems like it can only go down. However, by practicing a bit of cross-analysis with Bitcoin, other assets, and the traditional market, we've come to some very interesting conclusions, which I'll share with you right now. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
let's go back to Ethereum. Yes, the creek and the wedge have been broken aggressively, and even the wedge's trend line from the Z pattern has been breached. Still, as I mentioned earlier with Bitcoin, and you can see it here on the right, as long as this structure isn't lost, the end of the world hasn't been confirmed. Just an expression, of course. The so-called end of the world is a joke. What we're really talking about here is a medium-term correction, not a return to all-time lows or anything like that. So, if we say that as long as Bitcoin doesn't break this structure, we're safe, but at the same time, we've already seen the breakout happen, what can we conclude? It's simple. example, if Ethereum manages to reclaim the creek and confirm that the potential black swan scenario is off the table, what it's telling us is that since Bitcoin hasn't breached its final threshold, what we're seeing in Ethereum could just be a shakeout, a trap before resuming an upward trend. This highlights just how important cross-analysis is. As I said in Friday's video, we don't know what will happen. Nobody does. But we have to work with these kinds of hypotheses. What I'm showing you is what you need to look for in the charts to rule out a medium-term bearish scenario. Since Friday, we've gathered new information which I'm illustrating for you now, and it's only natural that we update the analysis to reflect this. That's what I'm sharing with you here. It would be a huge mistake if, despite having new information, we stubbornly clung to an idea just because we were attached to it. That kind of mindset is what kills traders. Now, Ethereum still has a chance, as I was saying, to recover that structure. We'll see how it does, but if it manages to recover it, as I mentioned, we would rule out the bearish trend. That's the key takeaway here. On the other hand, if you see Bitcoin breaking through the creek, validating it, but then failing to hold above it, then the bearish scenario remains in play. Do you see how we're not trying to predict the future? That's not our intention. What we're focused on is understanding price structure, recognizing how large institutions manipulate the masses, and using that knowledge to evaluate, based on what we see in price action and its interaction with specific structures, what's most likely to happen next. But at no point are we trying to predict the market's future, as if we had a crystal ball. Of course, we can have a preferred hypothesis to work with. That's perfectly natural. Now, let's take a look at the BNB chart. Remember, all of this is a Z pattern. This is a macro Z trend line, and what we've been analyzing here is that after this accumulation phase, we've reached the institutional target. At the same time, within the fractal market context, we're also seeing a complex corrective pattern that has collapsed into a wedge. That wedge, as you can see, has already broken down. Here we have the breakout. We can see how the defense zone is being protected. And now, just like with Bitcoin, we can say that as long as BNB doesn't break this drawn trend line, we can't confidently say that the price is likely to fall. What we do know, however, is that for us to turn bearish on the crypto ecosystem, we need to see a black swan event here. Until we see that, all we can do is speculate about the possibility. Now, let me add that if this defense zone is breached, in other words, if the price comes to test it and breaks through with some ease, it's highly likely that we'll push toward a new all-time high, and the bearish idea will be discarded. I hope you're starting to understand how technical analysis works and are developing that analytical flexibility needed to adapt to an ever-changing market, one that shifts every minute, every hour, and every day in financial markets. Now, let's look at Solana. What we're observing here is a redistribution process that has already reached its institutional target as we measured earlier, and that's why we're seeing this reaction. At the same time, we see this wedge, which we've already analyzed and evaluated in terms of its breakout. Here, we can also see that a key structure has been lost, potentially signaling something more critical. However, as I said, nothing is fully guaranteed. This is why we've identified that Solana has a key threshold, which is this trend line. In a positive scenario, this could be telling us that after the structure broke, the price is coming back to test the origin of the breakout. Therefore, the bearish path isn't entirely set in stone just yet. Let me tell you something, if we see the price manage to move back inside and fail to recover, things could look quite grim. At the very least, we would likely come down to test this defense zone, signaling the potential for a medium-term bearish scenario, as I mentioned earlier. But as you can see, this is far from lost. We'll need to observe how the price interacts with this structure to assess whether we have stronger indications of a medium-term bearish trend, or if the price is simply testing the origin of the breakout. We'll get more clarity as the next sessions unfold. Of course, reclaiming the $205 price level, no matter how it happens, would be a very positive, bullish signal for the ecosystem. That said, the red flag is still up, signaling that a bearish path is a possibility. That hasn't changed. What we're doing here is showing you the structures in which you need to look for, either to see that warning light shine brighter, or to know when we can turn it off entirely. If that happens, we would continue with the crypto bullish trend, which I'll show you now with Bitcoin. This upward trend is something we've tracked throughout its entire rise. Right now, we're simply asking ourselves, are we entering a risk zone? Is it possible that we need to protect ourselves? We'll know soon based on what I've explained, and from there, we'll assess whether we're about to start a medium-term bearish period, which of course doesn't have to be the end of the world. Or alternatively, we might see the alarm deactivated entirely. Time will tell as we observe certain behaviors, and if that's the case, the movement will simply continue. Here's the thing, we've been bullish from the bottom and throughout the entire rise consistently, and on Friday we told you, hey, at this point we're starting to have doubts. Maybe a bearish path for the medium term makes sense. Now, what we're saying is that yes, it still makes sense, but it has lost some momentum. We've just shown you exactly what you need to look for in the charts with your own eyes to validate the hypothesis of a medium-term bearish market, or on the other hand, to determine whether we'll simply continue with this well-established bullish trend that's been in place since the bottom. We'll keep monitoring this over the coming days in this fascinating world of financial markets. I hope the explanation was clear. If it was, let me know in the comments. And if you enjoyed this advanced technical analysis, give the video a like, subscribe to the channel, and hit the bell icon so YouTube notifies you of future uploads. Good luck with your trading, and see you next time.